Let's now get a focus on the gold market and perhaps the ways people can use that to help manage their wealth through investing in commodities. Bas Kooijman joining us from DHF Capital. Bas, welcome to Ausbiz. So,
good morning.
Let's take a look at gold. Obviously, we know how well it's done this year to date. It had a bit of a pullback. What are your observations with the gold market at the moment?
Yeah, it's extremely interesting. We have a very good year at the start, and at this moment we do see a maybe official lower high. Yesterday we closed the market a little bit lower than before. Everyone is still holding on to this 22nd of April 3,500 high. And the default question is, are we going to go higher this year? On the long run, we do feel that that's a possibility, but we are clearly in a bit of a pullback at the moment.
So what are the fundamentals that are likely to drive it higher, do you think? What are those catalysts?
So the catalysts that we had over the last year or two actually were mostly geopolitical tensions all over the world. And the moments that those bad news stories come out, gold is just getting this very natural push for being a safe haven for investors and hedge fund managers alike. So therefore, the push can be that if there is still a lot of tension in the world in different zones, but also, of course, the activities with Trump mainly driving the gold price up lately in the last 2-3 months.
And also, we've had a lot of central bank buying. Is that continuing?
I think that on the long run, that will continue. The reserves were a little bit depleted and being added on the long run. We also saw a lot of influence from Asia, a lot of buyers on that side. So again, it is like a safe haven to mostly hedge. The biggest bull run we saw was also related to the crypto CFD approvals in Europe earlier. And we did see that people who are both taking more risky assets in their portfolio, they will also add more gold into their portfolio at the same time to hedge out that potential risk.
All right, so as you see it, what role does gold play in a diversified portfolio?
I think it's very important. If we look at an individual level, I would always advise to have maybe 5 to 10% of precious metals in someone's portfolio. It's a safe haven that kind of hedge out any negative equity markets the moment they occur. As gold is rising that much faster of the moment of crises. On an investing level for hedge fund managers, mostly that percentage is a little bit lower, as there is still a bit of a question is what is the liquidity of actual physical gold holding that into a safe. But with the right partners, it is possible to even then liquidate physical gold quite quickly in the market. And therefore, it's kind of a liquid but safe part of that portfolio.
How do you see it then, of those potential options you have, be it holding the physical asset, an ETF, or perhaps individual gold stocks?
So I think it depends a bit of the size of the total portfolio. Individuals mostly still choose for ETFs or for hosted gold, basically bought online and stored in a safe in their name. Up to 1 kilo is mostly purely ETFs. 1 kilo and above, you would be able to more privately store it in your own name. There's different online support services for that. And as investment managers, it mostly only bought on paper.
And as you mentioned, precious metals as a whole, what else are we seeing in that space? I mean, silver has certainly lagged. I think it's worth about 1% of gold at the moment.
Yeah, so there's different precious metals. Silver, for example, is an absolute amazing investment opportunity as well. I've seen silver being at a price of about $25, seeing it extremely undervalued in my opinion, and it does follow gold on the chart if you put the charts over each other. Yet the percentages of increase of silver are much higher than gold. So it is an undervalued equity investment opportunity, in my opinion. And therefore, it would be really great to incorporate percentage-wise, maybe out of 10%, 2 in silver and 8 in gold.
All right. Any other precious metals there, such as palladium?
A little bit harder to get like a physical hold of those. If you're buying it in the ETF space, then the palladium is one of the other options. It's also very interesting that silver is used a lot into the production of solar panels, the production of electric vehicles, and it is still a limited supply. So the more we move into those newer technologies, where, for example, silver is needed, the more the price will get to its real value and maybe the right level next to gold again, and as it was before about 20 years ago.